The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento for the next 2 days. My pleasure to be here. Of course, this is not an easy task. The absolute master of both the Fibonacci, the Gartleys, the butterflies. I mean, what are we talking here? All right, well, let's just go to the market. We're looking at the E-mini up 50 cents. Trying to make it as simple as possible. You don't need to know anything else about the Chapman wave methodology. Just look at this pattern that's forming here. It's a cup formation. The cup formation says that there is a chance that the 2397.25 high of the 1st of March, I call it a peak D and a Chapman wave 5, that could be tested in this particular move. And what would happen is it would break into a new leg up in the weekly chart with the cup formation. We have 3 trading days to go for the monthly chart. And if I go to the monthly chart, let me just go to the continuous contract because that's where I can get the most pieces of data. We're looking at this doji candle, the candle of March, that has a particular methodology in terms of what I look at, in terms of candles. See this little candle right here? This is the candle back of April of 2016, the little doji. My contention is that with doji candles like this, what is a doji? It's where the price opens and closes pretty much at the same level, and you've got either a short or a wide shadow, the leg up and down, and that tells me a whole bunch of things. Now, what it told me about this particular move here back in April of 2016 was, if there's a close above the candle high, then there's a chance you could come back. That is the next candle. You come back and test the midpoint, that is the opening and closing price. But there's a really good chance that if you don't close below the low of that candle, you'll go higher. Well, that's exactly the same thing here. That if by Friday afternoon there is an extension above 2398, exact round number high, isn't that fascinating, all-time high? What we'd be looking at is, this is the continuous contract, is if there's a push above, it extends as leg C. In the Chapman wave methodology, we're always looking for 4 higher peaks, and that's the reason why a week ago when I gave my webinar, I was saying in the outlook that I have for 2017, there should be higher highs to come. And one of the reasons being, we should still go to a leg. The S&P should still go to a leg D. That's where the yellow light will flash, but it doesn't mean to say you have to do anything, but that's the target. There's your peak D right there in the monthly chart back in July of 2015. So that's the object, and that says longer term, things are very bullish. Shorter term, you're starting to see a breakdown in the weekly chart. You can see this in the Dow itself, INDU. Right here, let me go to the continuous contract of the Dow. Look, this is the YM, and the YM says that the high that was made on the 1st of March, and this is a changing price because it's a continuous contract, let's call it 21,117. That's the print high. That will change when it gets smoothed out in the next month and the futures contract changes. But in the meantime, that would be the high. If you go just one fraction above 21,117, you've started a leg D, and that's been the missing link here. That the Dow, so many weekly charts have gone to Ds, and yet you've got the IWM cash, that is the Russell 2000, which failed to get to 140.87 for over 2 months since the March high, and then all of a sudden yesterday it went above by a fraction. 140.86 was the high on the 1st, and look what happened yesterday. 140.88, that's 2 cents, gets you to leg D, but it also extends leg C in the monthly chart. Now we have almost all, except for the Dow, which did make a D in a leg D. There'll be a peak D if there's no new high above 21,169. So to sum it up, the longer term is very positive. Shorter term, I think we're getting really close to, in May, I think we're going to see some kind of a top. We've already seen a over 6-week consolidation in the Dow. It hasn't since the 1st of March. It hasn't broken above 21,169. So now let's go to the nitty-gritties of the shorter term. Look, the 10-minute chart, there's a pattern that I call the rectangle formation. And a rectangle formation says, in my work, that a sideways consolidation in a rectangle pattern can last a lot longer than your patience. So here we are. We start the rectangle. Let's put it at 4 o'clock on the 25th. This is now this is a 10-minute chart. Don't forget. Look how many bars we've had since then, and yet we've been stuck in a range that says the high of 2386.75 and the low of 2382.25. That's been the boundary. And that can last a little while longer. Of course, we've got the announcement about taxes coming out today. Will that spike the market higher again? So now let's go to the other aspect that is so important. What we're looking at here, and of course, this is Larry Pesavento's show, Trade What You See, Basil Chapman sitting in for Larry, and my show is always 11 o'clock, 11 to noon Eastern Time. It's called the Tiger Technicians Hour. My service is called the Opening Call. So what we're looking at here is that within the context of markets, you've had two huge gaps to the upside. Probably we're not going to get a gap this morning at 9:30. And my contention is that, based on many factors, is that normally at this particular point, we should see a doji-type candle. That is the candle that we're talking about, with a much smaller range, closing either at about the opening price. But what's really important about this particular phase right now is if there is a sharp close higher above 21,080s, we're at 20,996 right now in the Dow. If there is a close above that level, the magnet of 21,169 becomes so strong that we should at least get really close to that. If we do it before Friday, as I say, that extends the work higher. The aspect of higher highs and higher lows kicks in again. But most importantly, you'll see we've got these yellow. This is what I show subscribers. And one of the reasons why we were short up until 2 days ago is that these yellow rectangle formations show the stochastic. Larry does not use these techniques. So I'm just showing you something maybe it's a little new to you. The moving average convergence divergence, there you see it's called the MACD, 12, 26, 9, 1, 1 are the ratios. And the slow stochastic, which is 43, 3, 1 and 20% and 80% are the levels to watch. Well, every time it was above 80% in the stochastic, it kept coming down, and that gave you yellow rectangle consolidation. So I thought I'd just briefly go through these things. We've seen the same thing here. Is this going to be a breakout like all the other breakouts after the rectangle? Well, we need to see what happens with the stochastic. Does it cross positive before it crossed positive on that very sharp move to the upside? We haven't done that yet in the MACD. I'll be back. We'll talk about the markets. We'll go through currencies and gold, etc. as soon as I return. Basil Chapman sitting in for the one and only Larry Pesavento.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I love hearing that Mozart overture. When I was a professional musician, I conducted that many times. Okay, so look at this. This is the 2-minute E-mini chart. This is something that I rarely use because I always expect that D is the most important thing. And there was a period where I was trading the futures and I found that using what I call a phantom peak D was very good, because if the technicals were suggesting that what should have been the third highest peak, peak C, was there, but it looked like a D, that fourth highest peak where other things can happen. If I wasn't prepared for the pullback, I would be surprised. And then I found there's a technique that I use that gives me what I call a phantom peak C. There it is, that red one there. And they gave you the D with the down arrow. I put the down arrow in. And look what's happened. We've just been stuck in a trade. We've used a tremendous amount of time. Not that much in price, but at least it's giving you a time which corresponds. See the MACD fast moving average? It actually resembles, look, you see the outline of the green faster moving average, called the 9-period differential. Look how it outlines what's going on in the stock price. Okay, so here we are, and that's saying this is negative, but it hasn't failed. And if it does not fail, but the technicals are sliding, it means when the technicals come back strong, we'll see whether or not there's enough oomph, enough emphasis and strength to be able to push it back to the higher 2386.50, I believe that was. Okay, so now let's do this. We're going to get out of that. And there are a couple of things I was asked. During the break, I was asked about, let's see, what did Tim ask? Basil, is this a good entry point for Netflix? Thanks, Tim. Tim, I'm going to suggest if you're looking at this as a longer term buy and hold, I would say starting a small position in Netflix at 151.95 right now, I'd say it's a risk, knowing that you were going to set 3 places to buy. One is right here. There's a tiny position, and then another one at 152, another one at between 141 and 138, and then you can have another one that says, you know what, if there's just a massive decline at some point in May to June, something like that, then I would like to see if the 131 9-period moving average in the monthly chart, that black line there, is taken out, then I want to just have a crazy thing and say it's at 152 now, give it a 20% decline, let's put it in at 122. But I cannot do that. In all reasonableness, I've got a leg E. It might have recycled, but I'm calling it a leg E now in the weekly chart. It is only a leg C, and that's why I'm saying to you in the monthly chart, longer term, I think it's going to higher highs. But I believe that you're looking at this as a shorter term buy. Now, I'm just going to say to you, you know what I would do after it's $152 stock? I suspect that if it does rally somewhere between 104.50 to 156.20, so that's 4 points, that's like 3.25%, 3.5%. The risk for 3.5% up, but for 12% down over a 5-week period, I'm just going to say to you, risk reward, I would not be buying heavily here. But if you are thinking that there's still more to go on the upside, because your work says that you are still bullish for maybe the next week or two, you could start a small position here at 152. My thinking here is rather buy 155 option or 150 call option for May. And just for much less money, just put it out there. And if you're a winner, you're a big winner. If you're a loser, you're a small loser. And you don't have to worry about a thing. That's the way I would do it, Tim. A gap up like this to an all-time high, leg E in the weekly, F/A in the F is very negative, A is very positive. If I've got a question like that, I'm just going to say step aside for a moment. Okay, so that's that. And then I had a question about, okay, let's now go through the things that Larry likes to talk about. Let's look at the TLT. The TLT, which is the Lehman 20-year T-bond fund, trading at 121.55 up 10 cents, had a couple of patterns that I use in the Chapman Wave methodology. You see, I drew this in a long time ago. It's the schematic. It is the pattern that I'm looking for, and it looks like a lower. This is the weekly chart. On the left, daily. In the middle, weekly. On the right, monthly. Monthly is bonds are on the cusp of breaking major 21-year bull market up channel. And they will do that if they start to trade under 115. So let's not even think about that right now. We're at 121. Just wanted to mention that. But what's really important is this pattern, the lowercase h that goes to lowercase m. I drew this in ages ago because these patterns tend to, like Larry loves to look at patterns, and he loves to look at patterns that formulate. They're generic to his watching technique, to what he does, to the template, to the schematic that he has set up over the 20, 30, 40 years that he's been looking at these. And what happens is when you recognize these patterns, you've just got to be real stubborn and say, until this pattern breaks, and it would break if there was a close in the TLT up in the 126.80s, it went to 125 and turned around, 125.99 and turned around. That H pattern that goes to a lowercase h that goes to a lowercase m, it's still in force. And my aspect of looking at this as the continuation of a Japanization of our bond yields still seems to be in place. So if you look at the daily, there's another pattern. I don't want to go into it right now. It's called the Chapman Wave Stalk Leg. There's a long move up, then it stalls, so I call that the leg. Then it forms the body, and the body has to have an oval, not a rectangle formation, but an oval formation. If it does that, it can have the neck, which goes to the head. You look for resistance, in this case, the 200-period moving average resistance at the orange line. And then it starts the beak. And that beak invariably goes right to the upside, the body high, in this case, 122.25, the high of the 7th of April. And if it goes halfway into the body, be careful, because it could touch the body low, in this case, 120.21. So I'm watching this really closely. My contention is that money will flow back into bonds when the equities become extremely volatile with big down moves. So we saw that earlier on. Now we're seeing the reverse. Money's coming out of bonds into equities. This is really important. The MACD is just crossed negative. Stochastic is negative. And it's suggesting that the 120 area is going to be really key support. And the H that goes to an M pattern in the weekly chart says, just be very careful. And if you look at the TBT, so that was a peak F in the Chapman Wave. The TBT is pulled back in a trough A, B, C, D, E, F, G. Trough G, the seventh wave to the downside, and it is trying to rally. It is in leg B right now. It's trading at 38.40, down 0.05 at this particular moment. So now what we're looking at, so now we've just said that the bonds are stuck in a range. Let's look at gold. Gold right now is trading up, down to 60. It had the same pattern. The leg, the body, the neck, the head, the beak is unfolding, which says that the high of, in gold continuous contract of 1255.5, if that's pierced, and it pierced by going deep into the body, what's the low today? 126.3. Yesterday is 126. 1262.8 and it's 1262.3. So it's made a lower low today, and you can see that the weekly chart is at the apex of a triangle formation. We're going to be watching. We'll talk a little bit more about it, and when the market opens, we'll get a better feeling for what's working, what's not working today. I'll be right back. Basil Chapman sitting in for the one and only Larry Pesavento. Trade what you see, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. The market's opened and the Dow's up 12, S&P's unchanged. There are a couple of things I want to do quickly. Crude oil, you see crude oil, remember that peak D I said? Let me just show you what a peak D is. In the Chapman methodology, you try to identify the lowest, most obvious low bar, and you merely count each successively higher peak. You alphabetize them, uppercase A, B, C, D on the way up. They can go all the way to E, F, and G, but really D is where other things can happen. And that's exactly what we were looking at peak D right there in crude oil on the 12th of April. And this is the continuous contract. Oil turned around, MACD turned around, stochastic turned around, on balance volume turned around, everything turned around, and it came down very sharply. But it took a lot of days to come down, but it hasn't taken out the low. And in a sense, that says, okay, there might be a little bit of support here in the 49.08 area. I'm just going to say that if you're looking at the 120-minute chart, I'm going to be able to do this, 120-minute chart. That's what we need here. 120, yes, there's the arch formation that we're looking at. And the MACD is turning down. It still hasn't found a bottom yet. So crude oil, be careful. Crude oil still looks very weak, down 48 cents. Let's just go back now. We want to look at the EUR USD. I'm in the right place. Yes. Making a leg C. I suspect it is going to go to a D. So 10949, yes, it went to a higher high today. So this is leg C. So the euro dollar is still looking quite good. The MACD is good. Stochastic is good. It should go higher. And in the weekly chart, you've got the arch formation. Now, remember we spoke about the lowercase h that goes to lowercase m in the bonds, the TLT. Well, look, the euro USD, the euro dollar currency pair, did that. This is a really important moment when in the second arch formation of the lowercase m, it goes down and takes out the left side low of importance. That's the low of March of 2015, which it did.
The stuff from Tom I just forwarded you.
Whoops. And here at 1.035, these two bars, but it did not close below. That says it could rally, and it could rally to the next important moving average, and this in this case is the 9 EMA, which it went above, which says there's a chance that if the dollar remains weak, we'll look at the dollar in a moment, that you could in fact move a little bit higher here. So I'm watching the euro because the MACD is holding well and stochastic is improving, and that says there's a chance that over the next 4 weeks, and let's call it the month of May going to early June, that the euro could rally all the way to 1.12 if this continues to hold the support, 1.070, that 9-period moving average in the weekly chart. So, and we want to look at the dollar right now. The dollar is DXY. The dollar is trying to rally. It's made a full arch formation, and it's in a second trough D. The last trough D had that big rally that failed, B minus right there. Now it's in leg D to the downside. What I'm really concerned about in the dollar is that this major uptrend, this trend line, look where we're trading underneath it. And once you break it in an arch formation, it says be careful because you have to look to the left side for the trough. Well, that trough is way down at 95 something, 95.89 from November. So all I can say is that Friday's close in this weekly chart is really important. The dollar better try its best to get back to 100.25, at least 100 to close over 100, because if it closes anywhere in the 98s, that's just going to be very negative based on the technicals that we're looking at, because the MACD and stochastic and the daily chart are still very strong. And that says, wait a minute, what's going on? Why is gold not bouncing sharply if the dollar is so weak? This is a very interesting and a very complex. Explain the arch formation. I had a question about that. Let me go back to that. So the arch formation, dollar, DXY. The arch formation looks like, how can I put it simply? It looks like an arch. In the chap wave methodology, there's a whole, there's not just an explanation, there's a what to do in this particular formation. But basically what we're looking at, if you go to the low of 99.23 in the dollar made on the 2nd of March, it ran up, and very often in exactly the same, I call this the plumb line, at that peak D right there on the 2nd of March, so that was February, and on the 3rd of March, the dollar turned around. Remember, that was the speech, and then you had that whole conflagration going on between gold and the dollar, running and unrallying, and they weren't sure. And then the dollar started on its way down from peak D, the 4th highest peak. Look what happened. It took exactly the same number of bars on the right side to come down to make this full arch formation, semicircle formation, to retest and break at 98.86. It broke and closed under the 99.23 low. So that said to me that any bounce should fail. and she failed at some point following the stochastic and the MACD, and you made another arch in also almost an exact time price left. Yep, so exactly the same. Left side price formation from 98.86 to the low that was made that took it out on the 24th of April at 98.85. Yep, it went 1 penny lower. So that's what an arch formation is. And if you're looking at the other side of the coin, you're looking at the cup formation. Therefore, here's a great example of a cup formation. I showed this to my subscribers, a stock that we tried to get, we missed it, but I said I'm still going to follow it because it has all the characteristics. This is the cup formation with a left side, right side price time match that's trying to do, and it's done everything. Look at that peak D, look at the failure. Now we've got ABCD, it goes up to another leg to E. But there's the cup formation, which is an inversion of the arch. Did I answer the question? I hope so. Yeah. So here we go. We're looking at Larry. Larry had, I think, had some appointments or something, and he just wasn't sure he'd be able to get back in time. So I'm sitting in for him. So I'm just answering a question. So now let's do this. I want to look at high-grade copper. High-grade copper right now, trying to rally, but really not a very, look, there's the arch formation failure pattern. So what we're looking at is an ellipse or a semicircle upside down or a semicircle the right way around. So, did we have Larry? I didn't see that. Did we have Larry? I'm not sure if we had Larry. Oh, I didn't know Larry was talking about. Larry is there. If Larry's there, call in, Larry. We need you. Okay. So now let me go back. Do you remember the pattern that we were looking at? I said rectangle formations can last a lot longer than your patience. Let's see if we broke into the upside. Look, you broke to the upside, but at this particular, so this is leg A, B, call that C or F / no, call that a C, but so far, it's early in the day, it's gone right back into the rectangle. It's just very difficult to break out of this pattern and hold away from this pattern. So that's going to be the test for me. What happens? Would you object to getting long HYGS? Okay, quick question here. HYGS, a stock that we did have, but we don't have it anymore. HYGS, it's kind of doing what we wanted. Hydrogenics Corporation, building manufacturing. They use hydrogen systems, trading at $7.40. Because, Peaky, you are a longer-term buy and hold person, I'm going to say start a position right here. But this is very different to someone who's looking at a short-term trade because it could still pull back. But I think it's in an area that is looking good on the monthly chart. Say, yes, you can start your position right here. I'll be back. Basil Chapman sitting for Larry Pesavento. I hope he calls. I thought I heard his voice, but I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It was my fault. I'm so sorry, Larry. I know that you were there, but I had a different IM. I thought I had the right instant messaging for Al, our producer. I now see that you were on. I'm sorry. You wanted to stop by just to say hi. I would have appreciated it. Always love to hear from you. Love your work. So, Larry, if you're around, just give a call. So this is what we're looking at. U.S. Steel is down almost $8 at $23.15. This is a 25% decline in steel. This is not good. And yesterday, of course, steel comes down. What happens to Alcoa? Alcoa soars. It's up at 35.60. Just a week ago, it was down in the 30 area. This is 20%. This is a huge move to the upside. So what I said, I had a question in the den. What was the question? About steel. Let's see, what was it? Yeah, so what are the implications? And what I'd said is that I think that with Trump, what we're going to see is that the president is going to, because he's selective in what he's looking at, and because if you understand the result, not the implementation of concepts, that's really what he's about. He's about making a final decision as he himself has put all the things that is important to him into a package. But as he's doing, before he does, until that very second that he does it, anything that's on his mind, he just talks out loud. And that's what you have to appreciate. And I think that the stock market is going to suddenly say, whoa, we're not sure quite where we are, taxes, tariffs, steels, aluminums, Fiat Chrysler has a great, where I drive by fairly nearby is a Chrysler dealer, and they just keep, all they've got are these Jeeps on the lot, as well as some of the bigger Chrysler cars, and they seem to be turning them over. People are loving the Jeeps. So my thinking is that it's very selective. Look, FCAU is up 67 cents. Nice big spike, actually closer to the weekly highs. That's Fiat Chrysler autos. And if you look at Ford is just stuck at 11.49. Up 2 cents, down to the bottom of its arch formation range. And General Motors is not a bad day. It's up 17 cents, 34.16, but a horrible chart, just not doing anything. So it's very selective. And that's the reason why my thinking was, now I can go back to what my thinking was in terms of the markets. Let me show you. in the we've gone to a D, we've gone to an E now, and I think that might be quite a bit of it of the move so far this morning in the 120-minute chart. But if you look at the daily suggests that we should have some kind of a pullback, and then maybe another pop-up, and the pop-up in the Dow might not take out 21,169 by Friday. So this is my belief right now, is that if you're looking at the markets as a package, then that's one thing. But if you're looking at markets as a rotational correction that's been going on, with a rotational correction to start in the QQQ, the Power Shares QQQ Trust Series, which made a new all-time high today at 135.51, trading at 135.15 right now. And if you're looking at the SMHs, the SMH, which is trading down 40 cents at 80.15, making a kind of a V-shaped pattern, which we're very familiar with in the Chapman Wave methodology, in the weekly chart, possibly a peak F. I think we're getting closer and closer to some kind of a consolidation that's going to take in. That's why I was talking about Netflix when Tim asked and sent me an email, asked me that question this morning. I think that it's too risky. If it's me, I'm just going to say, look, at 150, I don't want to have 3 to 4% on the upside with a potential for more than a 10% correction when it occurs. So why not have a little bit of patience? And there are this single leg A up. I'm going to be watching it real closely going into Friday. Leg E in the weekly. Look at Amazon, AMZN. Amazon failed to make a new high at 923.72 on the 5th. That was the high. Peak D. Now I have to put a down arrow even if it makes another high. It doesn't matter. All the technicals, the MACD, stochastic, everything suggests I should be putting a down arrow. So the daily is in a sell signal, and the weekly says I'm close, but I haven't got the signal yet, and it's still a peak E. We'll see, but the monthly chart is still very powerful in G/C. So I went through. Again, I've just been spending time over the last week or so going through stocks I haven't looked at. I want to be able to go through the IBD, most of the IBD 50. I want to get a sense of how many are starting to show topping signs and how many are starting to show building a base signs. In other words, how many of the top 10, I'm just, if you don't mind, I'm opening this up. Let's see if I can see the little tiny print from here. So we've got beat, B-E-A-T, which is beat out everything in its path to become an absolute leader. Again, making all-time highs in leg F/C. MACD and stochastic are fantastic. Getting overbought. This is where I start to say overbought, because the rule of the techniques that we use in the stochastic, if you read any book, it says over 80% is overbought. I say no, no, no. I love seeing it up in the 80%. I love seeing it in the 93%. But on balance volume is suggesting to me that we're getting a little bit overbought here. Look at this leg F, could be an instant restart in the weekly chart, and a leg F. I'm calling it an F for now, although it really looks like an instant restart. Biotelemetry Inc. Remote heart monitors trading at $33 up 45 cents. In other words, I'm looking at this and I'm saying, do I want to buy it here? Oops, and then it goes higher. Do I really want to buy it here at peak D? Oops, and it goes higher. Do I really want to buy it at E? Oops, it goes to. It's really tough. These are the things that you got to close your eyes and buy and say, you know what? In a portfolio that says I can take a 15% loss because I think it's going to maybe double over the next 2 years, that's the kind of thing that you want to be looking at. I'd be a little nervous now for subscribers to be getting in, but this is on my list for the next big pullback that fills the gap going into the 27s. That's where I'd like to be buying it. So let's do a couple of other things. I want to look at soy. Look, there's this pattern that just makes this little arch formation. It made that peak D. This is soy continuous contract, soybeans continuous contract, trading at 963 3/4, down 1 1/4. It's just not showing strength, even though the MACD, this is very negative. The MACD and stochastic power to the upside, and yet the price couldn't really break out. I don't like that. The corn continuous contract, chop, 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 going nowhere. Same sort of thing. It went to a D. There's your D, and now it gets a down arrow in the weekly chart. forming an arch formation. Why have I been talking about TRCCI? Why have I been talking about commodities being weak for some time? Because my commodity index, the TRCCR, this is the Thomson Reuters continuous contract commodity index. It's a weighted index. There's a little bit of everything. Look at that arch formation. Where does it stop is the issue. I'll be back. Basil Chapman sitting in for Larry Pesavento. My show is usually 11 o'clock till noon. It's called the Tiger Technician's Hour. So it's my pleasure to be sitting in for the one and only Larry Pesavento. He did call in and I missed him. I'm sorry. I'll be right back.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman. So yeah, remember that rectangle formation we were looking at? Let me just expand this. This is the 10-minute E-mini. So if it's going to, if it's going to break, it's going to break very quickly, and it's got right up until this next 10-minute bar to try to get to the high that was made yesterday at 15:30. That's at 3:20 in the afternoon Eastern Time, 3:30, around about the 23.89 round number high. But you see the way the magnet of this rectangle is containing the price. So, okay. So the TRCCI is suggesting that commodities better start to make a move right here, because both the daily and the weekly chart, there's a better candle over the last couple of days, but the monthly chart is starting to turn down. So this is a very important moment for the commodities. I want you to just look at, there was one commodity that lumber. This is WOOD. This is at peak E right now. This is the iShares Global Timber and Forestry ETF. I'm watching this real closely because monthly is still very positive. Weekly has all the signs right now that it's getting a little bit toppy. So we've got to watch that very closely. So yeah, I had some calls. Yes, I didn't realize that one of our stocks got stopped out by a fraction yesterday. What a pity! I was so busy with trying to assess the market that I forgot to really check on that. And now it's up quite nicely. I might get back into it. I'm sorry, I would have done that this morning and said let's get back in because I like the action. So if you're out of it, you can go. You have to go back now with a smaller position because it's not the best price that we had. So that's all I wanted to say to that. Now, today we're going to have news coming out all the time. We should see flurry. We should see spikes to the upside. We're about to wrap up, and you're going to have. Well, first of all, thank you for John Logan at 9 of 9 in the morning. You've got John Logan giving a fabulous presentation of the different indices and stocks that he's looking at. Then you get Tommy O'Brien Jr., who's just producing the most fabulous 3 minutes of market assessment. And now we're going to have Tommy and Tom come back. I'll be back at 11 o'clock. Thank you very much for being here, and I'll see you tomorrow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.